Hello students and welcome to the lecture. So students, as we know that we are covering the financial system and basically since last few lectures we have been discussing upon the Reserve Bank of India. Okay, so these were the topics we had scheduled for the discussion of the Reserve Bank of India. Alright, and if we talk about the topics written right over here, so we had completed the introduction part, we had done with the monetary authority. Okay, we had completed the banker to government. Thereafter, we had completed the banker's bank. Okay, so what topics we left with? We left with the forex custodian, okay, regulator and the supervisor, monetary policy, and then the forex management. Okay, so it means that total 8 topics we had. Out of 8, fourth we have completed, and the fourth are remaining. Okay, so let's start the discussion over the remaining topics. So basically, if we talk about today's topic, then today's topic is forex custodian. Okay, forex custodian is our topic. My first question is, like, what do we mean by the forex? In the previous lecture, also I had told you about it. What do we mean by the forex? So basically, the term forex here signifies the foreign exchange. Okay, it is also known as the foreign currency. Okay, so this is known as the forex custodian. Now, let's have an overview of it. As the custodian of the foreign reserves, the Reserve Bank of India manages and oversees the country's foreign exchange reserves, which consist of foreign currencies, gold reserves, and special drawing rights allocated by the International Monetary Fund. Okay, so basically, you can say, or you can see here that the as the custodian of the foreign reserves, Reserve Bank of India manages and oversees the country's foreign exchange reserve. It means that they are not only in the charge of maintaining the reserve but also increase and decrease of the reserve. First thing. Second, what are the foreign exchange consist? Okay, now this is a very interesting question. Like, what things are considered as a foreign exchange? Okay, so the answer is foreign currency first. Second is the gold reserves, and the third is the special drawing rights. Okay, mainly whenever we talk about the forex reserve and the forex custodian, basically it's our, you can say, the habit that we generally consider the foreign currency, okay, as an foreign exchange. Got it? But this is the point which we should understand. All right, because foreign currency is a part of foreign exchange, is not a foreign exchange. Okay, so for this, basically we have to understand what do we mean by the foreign exchange then. All right, so basically if we talk about the two countries here, country number A, country number B, two countries are here. All right, country A and the country B. Country A will have its own currency. Country B will have its own, right? Both the countries will have their currency. First thing is there. All right, so suppose if there are two traders, one is from here, second one is from here. All right, both are having their domain in the different countries. All right, so what do you think if they want to do a trade with them or trade with each other? All right, it means that whether they are buying or whether they are selling, or you can say it's a buying and selling, because one is buying, second one is selling. If this is the condition, so you can say there will be some monetary transaction, right? There will be some monetary transaction. Got it? So it is all about this one. Okay, because the monetary transaction consists the money and the money is the currency. So this person requires the currency of his own country, this person requires the currency of his own country. They want to do a trade of buying and selling, they are including the money transaction, but they do not share the same currency, right? They are not sharing the same currency. Got it? This is the case. Alright. Now we have find out the problem. Now is the time for finding out the solution. Okay. So there are two solutions. First is converting of currency. Second one is using universal currency. Two cases are here. Converting of currency using universal of currency. Got it? Now, if we go with the first option, it means that country A, country B, they both they both do buying and selling with each other. First case, okay. And what will happen? Then they will convert the currency into their respective country's currency as per the basis of currency ratio. Okay. For example, you can say suppose the currency ratio is A10 ratio B20. Okay, it means that if you are paying 10 notes of currency A, you will receive 20 notes of currency B. And if you pay 20 rupees of currency B, then you will get 10 rupees of currency A. It means that currency of A is stronger than B, because the lesser you are paying, the higher you are get. Okay, but remember, this is a time taking process. Why? Because if you are getting the currency from B, okay, then you are going to the bank of country A, then you are requesting that please convert this currency, change and all. So what will happen? At least the banks of country A should be willingly or able to convert the currency. For example, if they do not having any reserve of country B, okay, any currency of countries B, what will happen? Are they able to convert it? And you can say, if the banks of country A not interesting in holding the currency of country B, so what do you think? Will they accept the country's B currency and give A currency or not? They will not. The clear answer is there. Alright, so that's why it's a time taking process. Why? Because first you have to ensure that both the countries are in the good terms. So you can say the currency reserves have been maintained by A as well as by B. Then only the things could be done in a smooth manner. Okay. First option we have seen. Second option is the using universal currency. So what do you mean by the universal currency? Universal currency is that currency which is used in the international trade, which could be used in any country. Alright. And you can say which is generally preferred by world's different banking and the financial organization in terms of currency conversion. Okay, that particular currency is known as the universal currency. In such a case, the currency will be USD, also known as United States dollars. Okay, so nowadays dollar is used as a universal currency. It means that if the players of country A and country B want to do a trade with each other, they are not required to pay the amount in their respective country then convert it. No, they both will trade in the USD. Okay, because USD is functional in B as well as in the A. Alright, okay, so that's how the system works. So here we have seen the foreign currency, but why I had told you about the foreign exchange? Because if we're talking about the currency, then it's the first thing. Okay, currency scenario we had just seen, but second one is the barter system. Second one is the barter system. So now the question is, what do you mean by the barter system? Barter system is basically signifies good in exchange of goods. Okay, this is the significance, but here basically we call it as a semi barter system. Okay, so what do you mean by the semi barter system? Basically, suppose you can say they both are belong to the different countries. A, country B. Okay, in such a scenario, he is selling the item to him. All right, which means that he is required to make the payment to B. All right. For example, he had supplied the goods worth USD 20k. Okay, it means that 20,000 US dollars worth good has been supplied by him to him. All right. So he is required to pay the amount, but in place of paying the liquidity or you can say monetary amount, he had given him gold worth rupees or you can say worth USD 20k. Got it? So that's how the barter system works. Okay. So that's why when we talk about the forex reserves, basically we are not talking about the foreign currency, but we are talking about the foreign currency as well as gold reserves as well as special drawing rights, which are allocated by which organization? International Monetary Fund or IMF in short. Got it? So now here you have got a three questions. First is that what is the difference between the foreign currency and the foreign reserve or foreign exchange? Foreign currency is a currency, but foreign exchange is a broader terms because includes various things. Second question, what are the things included in the foreign exchange? So the foreign currency, the gold reserves, and the special drawing rights, SDR in shorts, are basically included in the forex reserve. Okay. Thereafter, which organization allocates the forex reserve? The answer is International Monetary Fund basically allocates the forex reserve. Okay. So students, basically, let's move forward. Thereafter, what we have the managing reserves. Like what do you mean by it? RBI is responsible for managing the country's foreign exchange reserves efficiently. This includes deciding on the composition of the reserves, therefore, how much should be held in different currencies, as well as the overall level of reserves needed to ensure the stability in the foreign exchange market. Okay, so basically, you can ask me, like, why we require to maintain the foreign reserve? Why do we require to maintain it? If we talk about it, then we could say that basically if we're talking about the international trade, if we're talking about the international trade, then in international trade, basically there are two main components we practice, right? Import and export. Okay. Remember in the lectures, previous lectures, I had told you during the exam bank, export is positive and shows the inflow. Import is negative and shows the outflow. Got it? That's what we had discussed. But if we talk about the import, then if we see the outflow, it means that here basically we are paying. Okay, and as we know, import means that we are importing the things and we are buying the things from the different countries, or you can say from the other foreign countries. So basically in the shorted and mounted formula, you can say if we buying the things from them. Okay, if we buying the things from them, basically we have to pay them. All right, and for these things basically we maintain the forex reserve or the foreign reserve. All right, it means that mostly times we prefer the trade in countries currencies. Okay, secondly in the universal currencies. Okay, and when to use the country's currency and when to use the universal currency, it's totally depend upon the condition of the reserves and condition of the economy. Okay, to ensure the stability in the foreign exchange market. Got it? Now, intervention in the foreign exchange market. One of the key roles of the RBI is to intervene in the foreign exchange market to stabilize the exchange rate of the Indian rupee, INR in short. It does this by buying and selling of the foreign currency using the reserves. Second, for example, if the INR is depreciating rapidly, the RBI may sell foreign currencies to support the INR and the vice versa. So here we have just, you can say, seen the picture. Let's understand the picture. Okay, so basically you can say, suppose if we talk about the foreign exchange, then here is one important thing which is known as the foreign exchange rate, right? So now the question is, what do we mean by the foreign exchange rate? Okay, so you can say, suppose if today we talk about 1 US dollars is equal to 83 rupees. Okay, so in simple terms, basically the foreign exchange rate means like how much amount is to be paid to obtain how much amount of the foreign currency, or how much amount will be received after spending how much amount of foreign currency. For example, here you can see if you pay 83 rupees, how much dollars you will get? How many dollars? Sorry, how many dollars you will get? 1 US dollars. Whereas if you pay 1 US dollars, how much rupee you will get? 83 rupees you will get. That's the picture. Okay, so remember how much you will pay in response of it, how much you will receive. It's a foreign exchange rate, and basically it's depend upon the demand and supply. Okay, how? For example, suppose if the rupees demand is in low, all right, but its supply is in high. So remember when I was telling you about the economics lecture, I had told you one thing. Like whenever the demand is low, but the supply is higher, what will happen? The value will be depreciate. The same thing happened with the rupee. Demand is low, supply is high, the value will be downgraded. And when it will happen, what happen? We have to pay more and will get less. All right, and this will lead to the inflation cases. Got it? It's the first scenario. Second, suppose if the demand of rupee is high but the supply is low. Okay, so one thing also I had told you, what was that? That whenever the supply is low but the demand is high, the value will be appreciated. The same thing is happened with the rupee. When the demand of rupee is higher but the supply is lower, so what will happen? The valuation of the rupee will go higher, which means that we will pay less and will get more. Okay, this is beneficial but in the short run only. Why? Because this will make our products costlier in the foreign markets. So maybe there are chances that the foreign players will started avoiding the Indian products, and this could lead us towards the exports decline. Okay, so now you have seen that how the foreign exchange rate depends upon the demand and supply. So what generally RBI do whenever, basically there are two cases: appreciation cases and thereafter the depreciation cases. So if we talk about them one by one, during the appreciation cases, when the rupee value will be to be higher, or you can say to be improve. This is called the appreciation case. Whereas if we talk about the depreciation, then it is when the rupee value is to be downgrade. Okay, this is called the depreciation case. Okay, so there are two cases: appreciation and the depreciation cases. Rupee value to improve, rupee value to downgrade. Got it? So during the appreciation, what RBI will do when the demand is high but the supply is less? Okay, second is the when the demand is less, the supply is high. All right, so to maintain this kind of situation, during this situation, what the RBI will do, they will start buying the foreign currency. Okay, because there is a ratio of the foreign currency and the INR. All right, so when they will buy the foreign currency, it means that INR. Okay, there is a one mistake. All right, they will sell the foreign currency. Okay, they will sell the foreign currency, which ensures that the rupee will eliminate from the circulation and the foreign currency will become dominant in the circulation. Okay, so what will happen? The quantity of foreign currency will be higher, but the quantity of the Indian currency will be lower. This is the first case. Second, if we talk about the depreciation, then during the depreciation, when they have to reduce the demand and increase the supply, they will start buying the foreign currency. So what will happen? the flow, or you can say circulation of foreign currency will be lower in comparison with the Indian currency. Okay, so this situation will reverse, that will become lower, that will become higher. Okay, so that's how the appreciation and the depreciation work. Okay, rupee value to improve and the rupee value to downgrade. Got it? Intervention in the foreign exchange market, I hope that you have understood it. Why the RBI intervenes in the market. Okay, and thereafter we had already seen the example. If the INR is depreciating rapidly, RBI may sell foreign currency to support the INR because it will increase the circulation of foreign currency in the market, but the Indian rupees will be come back. All right. Thereafter, next one we had is the ensuring the liquidity. Okay, the foreign reserves also play a crucial role in ensuring that the country has enough liquidity to meet its international financial obligations. Why? Because as I have told you, when we when we import something, what we required? Basically, we have to pay the foreign players, right? So the more foreign exchange we maintain means the more we could pay. And the more we could pay, the more we could import. Alright. That's why it is, you can say, very, very essential to ensure the liquidity in the market. This includes payment for imports, servicing of the external debt, and other international transactions. Okay, like you can say, if we talk about the imports, basically we had already discussed that for the import purposes, we generally use the foreign currency. Servicing of external debt, what do you mean by it? So basically, you can say the term servicing here signifies the repayment of loans. Okay, so what is the repayment of loan? So basically, if we talk about the government budget, that's why I always told you that the things are interconnected with each other. Okay, now you can see. All right, because the budget of the government we had discussed in the previous lecture also. Now we are also going to discuss. Okay, so basically, budget of government consider the expenditure, thereafter the revenue. Okay, suppose the expenditure is 20,000, revenue is 18,000. All right, which means that depreciation will be rupees 2,000. So the government has to raise these 2,000. So there were two ways to raise this, as we had discussed: internal and the external. Internal means the government will launch the treasury bills, bonds, and other kind of securities into the domestic share markets. Okay, and the external means the same could be offered to the foreign governments and the foreign players. Okay, so if somehow we are not able to manage the rupees 2,000 through the internal debt, so what we will do, we will shift to the external debt, right? For external debt, basically we will arrange the money from the foreign players who will pay us in their own currency. We will convert it into the INR for our, you can say, facilitation. But when we will repay them, so basically we will convert the INR into their currency and then we'll repay them. Alright. So for this purpose, basically we maintain the liquidity. International transactions, because you can say, suppose the government is providing some grant and loans to the foreign states. So for this kind of purposes. Okay. So students, basically in this lecture, we had discussed some facts and figures regarding the forex custodian. In the next lecture, we will continue from here. Till then, just revise all the facts and figures we had discussed in this lecture. Be ready for the another lecture. With this note, let's end this lecture, and what we say thank you.